The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour, where it's me, your happy and feeling good host. Once more into the breach do we go, dear friends. As always, we like to start the show off at this time. I've got like 20 things going on here, and they're all wrong for some reason. We'll get it figured out here. But we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, I think we're on track now. Of course, a big move in the S&Ps. As I said yesterday, I did go short a heavily leveraged position, so we're making some pretty good wood for the first, almost 24 hours of that trade. Had somebody in the email ask me why I decided to pull that trade out of my hat because there wasn't a lot of warning on it, and it really goes down to I hadn't really been watching the market from about 12 to 1. I was out eating lunch, came back, and just went ahead and ran my scans. I've been busy this entire summer converting them over from the original models that I've been using for years, especially for expiration, and moving them to machine learning versions and making them better. This is the first one I can honestly say that literally came out of the air and just straight from the data showed that there was a huge move afoot to go lower today. I don't know what happened, but I ran, I think about 11:30, I ran the model, no big deal. Came back at 1, ran the model. I got the results about, 1:40. And there was some huge moves into Friday where somebody thought something bad was going to happen. And it all started, it had to start somewhere right around that noon time frame. So maybe somebody thought that they knew something. Maybe this is just a bear run on the market by people in the streets, and they found willing participants to echo maybe the sentiments in the news to get the market a little bit more pessimistic. But you really couldn't push the market up. We saw that with 2 days of volume, and I'm looking at the markets both in volume and in the actual dollar amounts. We've shown that a couple of times, but there just wasn't a great deal going on. So I don't know what else you can say about it other than that. It was a big deal. Anyway, we went short just before the FOMC meeting. Somebody apparently somewhere was, basically getting extremely bearish from that 12 to 1 and maybe even farther on. It pretty much went through the rest of the day. And then, of course, seeing today pull down as hard as it did. Certainly somebody thought that they knew what was going on. You always wonder whether it's a self-fulfilling prophecy. Other people decide to sell because other people are selling, or do they really know something and that's why they sold, and the people think that they sold because they know something, but you never really know. It's one of those endless loops. But the size of the move yesterday between 12 and 1 was pretty seismic. I'm going to say it was a 7.0 on the Richter scale. So I didn't have a lot of time before the show, and I didn't see a lot in the individual charts of specific stocks either. So we dove into it. But that was it. I hadn't been short for a while. I kept on thinking we were going to get one bit more big run to the highs, and we still may. We'll have to look at it. The volume is not all that exciting today. We're only doing 1.8 billion shares. And my guess, I'll have to look at it at the end of the day, I think they still want to expire this market at 24.50 tomorrow. So maybe we're going to get a bounce. I don't know how big that bounce is going to be tomorrow. I'll probably exit my short positions at the close, but we'll have to see how it does. But not uncommon to see kind of a little bounce out here. And, of course, if you go to a week ago Wednesday and look at the low of that day, 80% of the time we will close above that. So you may get, a fairly decent pop. We'll look at those numbers during the break and give them to you. In the meantime, you know what we always like to do here, and that's start off the show with a little history.
Then it's all just a little bit of history repeating.
On this day in 1974, the night Chicago died by Paper Lace tops the U.S. charts. It was a story song chronicling the deadly 1930s battle between Chicago cops and Al Capone's foot soldiers on the east side of Chicago, a battle that actually never happened on the side of Chicago, which, if it had existed, would have lied beneath the surface of Lake Michigan. You can't blame these guys for not doing their fact checking. They'd written several songs and been ripped off by other people. In fact, what is it? Who's the Billy Don't Be a Hero by the Haywoods? Something Billy and the Haywoods? I can't remember those. Had grabbed one of their songs and released it in the United States to become a #1 hit there just 2 weeks earlier. So they had pushed this thing out without doing their fact checking. Sadly enough, Chicago, the murder capital of the world, its mayor continually lectures the rest of us on how to run our lives. I think I would probably be rather embarrassed to be telling other people how to run their cities when mine was the poster child for murders in the entire world. In fact, you're even a little better off in some very bad places in Mexico, if you can believe it, in the drug wars. But he continues to blow almighty. But what else can you say? Anyway, on this day in 1974, what else do we have going on? The day the music died. That was kind of a better one. It's just kind of interesting to see that there's not much in the way of history I wanted to talk about today. We will look at a few stocks, starting out with the most heavily shorted. If we can actually get that typed in right, TSLA, which is a Tesla. Wanted to see a lot of these highly shorted stocks not really pulling back that badly. It is rather broad-based, i.e. the selling has been fairly decently shouldered by almost all of the stocks out here. Volume's not all that exciting. As I said, we don't have but 1.8 billion shares on the NYSE. But we'll
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I don't know if it was that great of a song to be number one, especially in 1974. There's a lot of good music. But, yeah, I guess an okay, catchy tune. We have somebody in the den asking about, paper lace. I said that. About BH, Valeri Holdings? Are you talking about BHI? Somebody in the den's asking for BH for long. But you want BHI, or you're talking about this Valeri Holdings that I don't think anybody has ever heard of or talked about on the show before? Maybe you can say if that's actually it. Take a look at this one. Maybe longer term there's something here. Okay. I think maybe that's what we're looking at. Okay, BH, okay. Well, it's a no volume stock. So, basically there's an old story that I like to bring up when people talk to me about stocks that trade 200 or 2,500 shares a day. And that is, there was an interview with one of the NASCAR team owners at the time. And this is, I guess, 1980s, Junior Johnson. And they're asking about Junior Johnson, if whether Darrell Waltrip is committed to winning the Winston Cup that year. And he had a kind of a very smart thing to say, and that was that the chicken is dedicated to the breakfast, but the pig is committed to it. And basically, that's kind of a good way of saying that if you buy one of these stocks, you're committed, because if anything good or bad happens, that's it. You're not getting in and out of this thing. 2,500 shares is not that. One of the other things is I do a lot of price volume work. And when there's no volume, it's like asking one person who the next president of the United States is going to be. It's meaningless. So I've done a lot of studies, and if you don't have 300,000 shares, most of the time my work will not work. So if I'm looking at something I want to see kind of an average of about 300,000 shares a day. That gives you at least some level of experience of what people are actually doing. This is Baglary Holdings. I've never heard of it before. Let's go ahead. It's something always new. Let's take a look and see what these folks do. Operates and franchises restaurants in the United States. Which restaurants? Signature Steak, Great American Steak Buffet, Wood Grill Buffet. Okay, so a lot of that. Never heard of them. Based in San Antonio, Texas, where my mother bored me. So pretty good. That's the only thing is, there's a couple of stocks I want to buy long term in the Tech Insider, and I've been hoping to get to see the volume kind of come up in them, because these are basically roach motels, and that is, you don't leave them. If you're in it and something happens like this thing as it's come down, you just don't get another opportunity to either get in or get out. You try to sell and the stock drops $20. You try to buy and the stock goes up $20, and that is just, it's miserable as a trader. And I've never been good in it. Maybe someone else has another technique that works better without volume, but I just can't trade stocks with this light of juice. So we'll continue on. We've been breaking the lows out here. We're at 2440, 2441. And I'll run the numbers again after the show is over, but my best guess is they're going to try to push this thing over 2450. That was kind of the low end of the expiration window Tuesday night and kind of Wednesday. But that wouldn't be, 10 points off of being 27 points down wouldn't be a bad deal. I do think I probably will be looking at taking my shorts positions off at the close today and just letting expiration. After a day like this, expiration more than likely, if it's not a little up, is going to be sideways. And any kind of leveraged position is probably going to see a lot of burn off by 10:30. After 10:30 in the morning, it's going to be tough to get ahead of some of these leveraged positions, at least the ones I'm in. The decay will probably kill me the second half of Friday. So we'll look at that. Anyway, we were looking at some other stuff out here. Take a quick look at Apple, see if there's anything else in that happening. Not really. Down a little bit. Probably the thing that bothers me the most about technology right now and being long technology is just how much these guys are involved in politics and not involved in making their company any better. All the virtual, I'm going to say it correctly, virtue signaling going on just seems to be, makes me nauseous. Let me put it that way. When we talk about stocks, they're all doing it, so it's not anything, they're not anything different. But of course, that's the problem when everybody's in one town, everybody's of one mind. There's nobody making any independent decisions. And that's probably the worst thing that you can see in especially a single technology sector like Silicon Valley, is that there's not a lot of good independent decisions going on. Alphabet, of course, Google, surprised, shocked that they have white supremacists on their systems. But I've heard about it for 5 years, so there's nothing new. But they're getting tough on it now. But all it makes me think is that where were they, in the previous 5 years on this issue? They suddenly discovered all these folks. And just when anybody's being, especially in Silicon Valley, anybody's distracted with all this other stuff, it always makes me think that, one, someone else is not going to be distracted on it, and they're going to go in there and steal their cheese, or two, these guys are not watching where they're going. Technology moves pretty fast. If you're bothered by everything else and distracted by it, normally you're going to make a big mistake. And I think maybe we're going to start seeing that in the results of some of these bigger Silicon Valley stocks as they become the poster child for being politically correct. I think they're going to miss out on the fact that they weren't business correct. So anyway, down a little bit, no big deal. This thing certainly looks like it's going to retest 915.31, which is the July 3rd low. I wanted to see if there was anything else I wanted to get back in. People talking about maybe buying energy down here. Let's get into the commodities. Oil's up a little bit, I think, but I think that's a kind of a desperation play in gold and oil both. They're looking for anywhere to park some cash. I don't see a lot. The gold's probably better of the two right now, but we'll see. We'll come back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, the dollar had a good run off the morning lows at 93.22 up to 94.02, but of course gave more than half of that back, 93.51 on the dollar, and we're trading out here at 24.42 and change. It's Thursday. It's going to be hard to get a rally going. My guess is that they could pop the market in the morning and get it up 8 points from here and let it expire on a fairly quiet day. I'd be a lot more thinking that this was a bigger move, a bigger proportion. We've already had one down move that was kind of fast and out of nowhere. This one should be seeing a lot more volume come in as people get a little bit more nervous. So we'll see if this is something that started something bigger. I would have liked this if I was thinking a little longer term. I would have liked this not to happen during expiration. That it did makes me think maybe we saw a lot of people get long, get wiped out, then go short, and now they're getting, then they pop the market, got them long again, and now they're just tearing them apart in the whipsaw. Rose asks about OIH and OXY, Oxy. Rose doesn't say where she's from, so Lutz, Florida, Rose, is looking at the OIH. As I said, we were looking at these double gaps as the first level. These gaps go back to the 11th of February 2016. The 11th and 12th. You gapped up the first day, you gapped up the second day. And was it a huge energy? No. You also have 1999 with the January 20th, 2016 low. We're so close to that. I would not want to try to pull the trigger on these until they're tested. And for me, the problem right now is if we are in a bigger downturn in the market, it doesn't matter what it is. Other than probably gold, they'll sell the gold miners just as well as they'll sell anything else. And a lot of times, especially in heavily leveraged markets, you can't sell what you want to sell, so you sell the other stuff. It seems almost written in stone that instead of selling the stocks that are doing the worst, especially Wall Street itself will sell the stocks doing the best. And it seems counterintuitive to get rid of your best racehorse and keep your old nag in the bin. But it happens a lot more than you would think. They wait for the market to get a little bit better to sell the nags, and they sell what they can, which is of course the best stocks, and the best stocks will of course have the most amount of buyers even in a down market. So we'll look at that. What we got going on out here? Okay. Yeah, got some more emails. I'll try to get to that. Okay. Anyway, so we've got oil. 1999 is where you want to look on the OIHs. I think we're so close to it, and the energy's been fairly decent on the way down that I wouldn't want to be long this thing until I got a very good test of that 1999 from January 20th, 2016. Let's look at Oxy, OXY. And what do we have here? Occidental Petroleum. Here, you basically filled this gap up, had 3.9 million shares. Yesterday you had 3.7 million shares. So about the same. We've gone through that gap. We're below that gap. So that opens up at least 57.50 on Oxy. And you have a high volume low at 56.44. So I think, you're probably a week or two away from tests of this May 4th low in at least Oxy and I think a few of these others. But I think they're close enough. The energy's been strong enough to the downside that I couldn't touch these without a touch and test of those previous lows. Maybe we get something that changes what's going on, but to me, that's it. Anyway, Rose, thanks for the email. Just let me know where you're from so I can. We don't have that many Roses, but it's always nice to have two things together, a first name and a location, so I can remember people. I have a bad memory. I'm going to spank it so it will be better, but it's still bad. Anyway, how much time we have left here? Got about 3 minutes. One question about what I've been doing over the summer and actually for the last 2 years in learning is working on special machine learning techniques that work on sequences. Normally, if you do something with a moving average, all you get is the moving average. You get no intelligence on what happened before or what happens after. You're looking at a window, whatever it is, 9-day window, a 50-day window. There's no intelligence that gets moved on there. There is a thing called sequences in machine learning, and especially if you're talking about anything like, well, I've had a lot of people ask me why I can't write really good programs to figure out what's happening in futures, because, of course, the contracts expand and contract so wildly that you can't really get anything from one contract and put it to the next contract. I mean, what you've learned, you can kind of use rules of thumb and maybe what you learn as kind of a edge, but actually putting any numbers on it seems to be almost impossible. Well, there are new machine learning algorithms that do a very effective job at what are called sequences. And sequences can be any kind of pattern that is recurrent. So options expiration, you know you're going to have that every somewhere around 22 to 25 trading days, but they vary. Well, these machine learning algorithms can work with different length inputs. They also can work for other things. Let's say that you were looking at the other sequences or patterns that happen over a variety of days. You can queue all of those up, and they kind of are in their own little container, but you can learn out of that container and apply it to sequences going forward. Literally impossible with any kind of traditional moving average kind of technology that's been used in technical analysis for forever. But a lot of people have asked me why I'm so excited about this stuff. The applications are basically endless, and I continue to make my programs better than they've been before, which is always happy. But I've been writing kind of models for the market since about 2003. And, you know, there was just a level of technology you couldn't get past in a lot of the stuff. But machine learning is going to get a lot of my time over the next few years, I have imagined. Anyway, we'll talk more about the subject another way and get into some charts. Don't see much going on out here other than maybe a washout today and a bounce tomorrow as we come back. 24.42 on the S&P cash.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we got to 24.39.84 as the low a day during the break out there, but we're just kind of bouncing off these levels. Still under 2 billion shares, so the volume has not gotten that exciting. And we can figure out what's going on here by the end of the day. But my guess is we're going to probably bounce around these low levels. We may see some buying coming in at 330 or something, but those dipsters are nowhere to be found just yet today. Off 26 points on the S&P cash. Let's look at some of the other stocks that are interesting. Wanted to look at some of these, especially. Let's take a look at the XLE real quick and see, because these things that look like maybe they had an opportunity to bottom on these gaps, but down volumes, not all that great, but you don't like to see these things even on light volume when you just have, a congestion zone. That opens up, of course, a lot of these gaps in the XLE back down to 58, 57 bucks. That's kind of the next stop. And, of course, you've got lows out here that are untested. They're high volume lows. The January 20th low in the XLE is 51.30. And again, these stocks have had light volume compared to previous lows in this kind of congestion zone. In the XLE, that goes from about April 18th of 2016 all the way through pretty much August 2nd of 2016. And that's kind of what you've been chewing through here lately. But you drop that and you are down $3 or $4 fairly quickly. And that may be enough, actually, to get this head back down to 47.36, that January 20th low. The XOP, same kind of thing, not much different out here. Wanted to continue to keep an eye on some of these stocks in the smartphone sector. Qorvo is the old RF micro devices one. And your energy off this July 3rd low has been nothing. But again, even today on the big selling, you haven't had anything that looks like a big signal. If you are up against some fairly big down days, in this case, the June 14th, this thing came down with 2.2 million shares. You're into it, with 1.5 million shares. Could you get some more by the end of the day? Could. But again, what you want to be looking at is what these things would look like in an ABC down. In Qorvo, this is a fairly decent ABC, almost got the 618 retrace on it, and your ABC would set up, let's get this a little bit bigger, your ABC would set up to 5608 on just a 1-to-1. That's off $72.74, so not a bad one. Again, what would you probably really need to see these things fail and fail spectacularly and that would be the tax bill going the way of the dodo. And I think we had a lot of people really kind of push that. I don't know if it's propaganda or real. It's hard to tell. You can't trust anything anybody says anymore in the press. So just kind of look at the market in these kind of times and forget what all these blowhards on the news networks are saying. Off 27.5 points on the S&P cash, though. 1 point. We're still just under 2 billion shares on the NYSE, so that is not a big day. And you kind of have to look at that and say, okay, 2450 probably should have held. It didn't. We blew through it, but volume still hasn't really picked up. So you kind of have to look and think, okay, are we just going to close back up into that level tomorrow? And unless I start seeing a lot of volume, which, of course, a lot of it comes the last 30 minutes of the day, so you kind of have to wait and hold your breath. But unless we saw some kind of monster volume come in, and even if we did, we might see just an exhaustion day for a couple of days. You'd have to watch it. So, you know what? Someone just said something in the den, and it reminded me. There's a great song. I'm going to have to get it as a clip for the show, and that is, "One man's ceiling is another man's floor." Does anybody remember that song or who sang it? I'm going to say it's the album was called Ryman Something, and the guy's name that sang it. Maybe somebody remembers it. Maybe somebody in the our engineering can find that song during the break. But it's one man's ceiling is another man's floor. Anyway, it's still summer trading. Yeah, it can be. Let's take a look at HL, which is Hecla Mining. Was looking at some of these. Get rid of that so everybody can see plainly. You kind of had a bounce yesterday off a fairly significant volume. What I disliked in Hecla is it didn't test the March 14th low at $4.61. But you had 8 million shares compared to 4 million shares yesterday. And that's generally enough to make me think that somewhere around this $4.60 range is a fairly decent floor for Hecla. I do like the fact that energy at least came off somewhat off this April 13th high and all the way in the pullback into yesterday. But again, if we are in kind of a bigger market that's pulling back, while they may own the metal, unfortunately, it seems like everything gets sold in a bear market, just about, including gold miners. Maybe not as bad as other stuff, but if the market is going to pull back here, I think I'd probably be much more in the metals than I would be in the miners right now. So what else do we have out here? Salesforce. We've got something that would look like maybe a possible reversal in this stock, at least in the short term. And that is probably about as good as you're going to get in the stock of seeing some kind of railroad tracks or scissor top in Salesforce. We spiked to higher, 92.49 today, got back down lower to $91. Volume is not all that exciting, but you've got a nice little gap out there, about 88 to $89. Wouldn't be surprised that if the market continues to be weak, that we see that filled fairly quickly. I think they've got. Yeah, we'll have to look at that real quick. Let me check real quick before I say anything. Okay. And it is CRM, right? Let me just check. Okay, yeah, I thought it was coming up. Earnings is August 22nd. So your problem is that these stocks are hanging up here, and if they don't hit perfectly, they are getting pretty much punished. Walmart came out and was down this morning, got to 87.33 as a low. And one of the things you got going on out here in Walmart is a CEO that's probably a little bit too enamored with himself in the press, and him bloviating, I think, caused what was a fairly decent earnings call maybe to be looked at. mostly on his Leghorn press conference. Anyway, good numbers, but not good enough. Back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Remember, one man's ceiling is another man's floor. One man's ceiling is another man's floor.
Oh, Ryman Simon. What, 1973? I'm going to say something around there. Can't remember. Anyway, that kind of applies to the stock market, isn't it? It's one person's buy point is another one's sell point. So we can look at that. 2441 on the S&P cash, off 27. Volume continues to be rather light. We just cracked over 2 billion shares. So it's not going to be a big volume day. Expiration tomorrow. I haven't looked at the data so far today. Again, yesterday we saw a huge sell program of some kind between 12 and 1 in options. Today could be just the difference. We'll look and see. I'll know tonight. But I would, unless something drastically changes today, I wouldn't be surprised if we get a little bit of a pop into Friday's close just for expiration. If expiration wasn't around, I'd probably go with the theory that they sell this thing off into the weekend. But I think what we see today is kind of the flush for expiration. Monday, of course, and Tuesday next week are options expiration rollover days when a lot of stuff actually gets put on and taken off for the fall. So probably going to see fairly decent volatility, maybe not the kind if you're short you want Monday and Tuesday, but I think by next Wednesday, we're probably going to have another good idea of which way this is going. And if volume doesn't pick up, this could dry out fairly quickly. So we'll keep an eye on that. We just got not that much going on out here. As I said, it's all fairly broad. I don't see a lot of individual stocks that are ringing the 5-alarm bell. But we'll see by close today. I think going to see a lot more in the last 30 minutes today than we probably have seen in the whole last few hours. In the meantime, sell when you can, not when you have to, and we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.